Welcome back. Now, with inflation continuing to be a huge focus for the economy and growth forecasts being revised, we are joined by Johann Els, Chief Economist at Old Mutual, to give us insight of the mid-year economic update, the key trends shaping South Africa's economy, and what this means for businesses and consumers as we look ahead to the rest of 2025. Thank you so much for your time, Johann. Before we actually get into the details and the meat and potatoes of South Africa's own economy, of course, we have to look at the US, the world's biggest economy that does have a huge influence on the local factors. The thing that jumped out at me first is the outlooks that suggest that a US recession is likely. And I want to know how likely, considering that market participants have been calling out a US recession for a long time, but that has not materialized. And data is still largely pointing to a resilient economy. So really, what data here are you looking for, and what kind of scenario and conditions would form a recessionary outlook for the US?
When I say recessionary, I mean quite a bit of a slowdown in the economy. Not defined as two negative GDP growth quarters as the rest of the world. So it's a bit more difficult, but we've seen slowing economic conditions. The housing market is severely weak, even weaker in some instances than the COVID lockdown time, but also the leading indicator index that has been slowing since the start of 2022, looking like recessionary conditions already. And then for me, the uncertainty around policies, the on again, off again trade issues, investors' concern about the US as a safe haven status, all of those issues that probably put business and consumer spending on hold. And that's the type of scenario that I expect that will lead to much weaker growth conditions later this year. You're right, at the moment, the conditions are still pretty resilient in terms of the labor market, but I also expect some slowing. Private sector employment has already slowed quite a bit. And the federal government job cuts that will start to come into play from September onwards. So the job market will likely slow. That means likely slower consumer spending as well. And in that environment, the potential second round inflation impact from trade tariffs will likely be muted. And that's the type of environment that the Fed would like to protect the US economy. And I think rate cuts can restart later this year into next year in the US.
Yeah, we do know that market participants are pricing in a Fed rate cut come September. Just zooming in on those trade policies and perhaps the impact it then has on the South African economy. In your mid-year outlook, have you priced in that 30% tariff that Trump has threatened South Africa with?
When these tariffs were first announced early April, the so-called Liberation Day on the 2nd of April, myself and I assume all the other economists in the country has really priced this into their forecast. Financial markets have priced this in. I think there is still some opportunity to get a lower tariff. I know that governments are still discussing these issues, but for now we've factored that into our forecasts, and it's still a question of better growth in other trading partners, Euro area and China. Less than 8% of South African exports goes to the US, and that includes precious metals that won't be included in the higher tariffs. So it is an impact, it is a negative, but it's not an all fall down scenario because those exports to the US will be under pressure, but they won't collapse to zero overnight. So we factored that in terms of the growth numbers for this year and next year.
And even with that factoring in, Johann, can we then expect higher economic growth for South Africa going forward, particularly from the second half of the year?
Higher is a weird word because it's still going to be weak growth overall, but better than the first quarter, and certainly, hopefully, for the year as a whole, better than last year. So last year we had 0.5% growth, very weak growth in the first quarter because of dismal production numbers, mining and manufacturing. Electricity was weak. A whole bunch of the sectors in the economy were very weak, but we've seen that consumer spending have picked up. The cyclical improvements in the economy, much lower inflation, lower interest rates, all of that helping consumer spending. So that's certainly beneficial. Thus far in the second quarter, we've seen mining and manufacturing production picking up quite strongly. So there's also the benefit of a better second quarter growth number versus the first quarter. And then the Reserve Bank's leading indicator, the PMIs, all suggest somewhat better growth in the second half of the year. So I think there's a slight upward trajectory there.
And just on the mining and manufacturing sectors, is the growth we're seeing in those industries in particular sustainable? I also think of just business confidence and how that is at a low.
Sustainable is always a very important question. I think it is in this environment where we've seen lower inflation and lower interest rates in South Africa. So especially for manufacturing production, where consumer spending keeps on ticking higher. And again, it's nothing exciting, but it's better than where we were. So that probably needs some increased production to produce for that consumer spending. Mining has been bombed out for some time, so mining is just recovering a little bit. And when you've got increased mining and manufacturing production, that drives electricity production, and in turn that drives at least some employment growth, that in turn drives at least some further consumer spending improvement. Again, it's upward trajectory, but it's not anything exciting at all. But it's better than where we were at the start of this year and in last year.
Johanna, and just lastly, as we wrap up the conversation, I quickly want to go back to then how South Africa is interacting with the rest of the world now from here on out in terms of trade. You made a very interesting point in your note that says globalization is not retreating, it's recalibrating. Just contextualize that for us.
For me, I've heard lots of arguments that the trade protectionism coming from the US means the end of free trade, it means the end of globalization. Essentially, this argument started during COVID, when there were countries locked down, essentially. I think globalization will return as strong as ever, and perhaps stronger than before COVID. And part of that is the rest of the world outside of the US will continue with free trade. We continue to see advancements in technology and computing systems and digitalization, tourism, etc. I think US consumers in the end will demand cheaper imports again. They want the cheaper washing machines, the cheaper TVs, the cheaper cars. That will drive that current protectionism in the US to become more open post the Trump era as well. So I think free trade is here to stay, initially just outside of the US, but that will also in turn, on top of technology and tourism, drive increased globalization once again.
All right. Well, thank you so much for your time and for those very, very interesting insights here, and really appreciate it. That was Johann Els, Chief Economist from Old Mutual.